right, good morning. How are you? You ready to rock? Yeah, boy! All right. Hey, welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey. Oh, I guess I could have turned it the right way. Hey. Got my Forex.Today coffee. How you doing? Beauty, huh? Beauty. Rippa. Look at that. Look. Grand rising to you. My name is Wayne McDonald. I'm in love with trading Forex. Yeah, the sweetest love ever. The kind of love that pays you money. But hey, it's also intellectually stimulating, this love that we call Forex. I tell people, I say, hey, look, you have to know absolutely everything from all around the world and then accurately predict the future every single day. But besides that, it's straightforward, pretty easy. So, hey, yeah, China shut down. Another COVID death in China. They shut down an entire city. You're like, wait, what? Your weekend is ruined, huh? Just like that. All kinds of things. China also told Saudi Arabia, yeah, stop sending us oil. We don't need any more. Oy vey. So, tidal wave of fundamental data coming out of China. And of course, in the United States, guess what? It's Thanksgiving week. So we'll have a live stream today and we'll have a live stream tomorrow. If you're in my day trading group, yes, we will have day trading tonight. And you'll have stop, look, and correct tomorrow, but not a day trade, not a day trading session. And then off we go to holidays. So if you're going to trade this week, you should probably get your trades in sooner than later before sort of the weird market dynamics of holiday season approaches. So be careful this week. Lots going on. And also the market could just lose volume and volatility. And what that means to you is it may react technically different than you're used to. Technical analysis is a self-fulfilling prophecy. So if there's less people trading, it may behave differently than you normally would expect. And that means to you a higher degree of risk. And risk is bad. All right. So throughout the session, ask questions, get involved, let me know how I can help. I know a bit about technical analysis. I have formal education in macroeconomics. Cool. All that's fair game. Let me know how I can help. In the description below today's video, there's a link to my book, Strategic and Tactical Forex Trading. There's a link to my community, fxbootcamp.com. It's $88 a year. It's pretty easy to join. All you have to do is insert a credit card. Also in the description below, there's all kinds of other resources that you will find helpful. One of the links goes to tradersway.com, an ECN with straight-through processing. You might like that as a trader. Straight-through processing. You go sell and go boom, sell, and you're into the liquidity pool, just like that. So if you like fast execution, speed, narrow spreads, huge swaps, tradersway.com. Another interesting thing going on in the world is Disney a major company in the world has fired its CEO and put the chairman of the board in charge of the company again, Bobby Iger. And so that stock's up 10%. But you know what? With all the bad China news, there's a lot of risk-off tone again. Okay, risk-off tone again, which means dollar strength. You can see further China shutdowns. Also in here, before this dramatic drop, I think the first part of this dramatic drop in the price of WTI had to do with China calling up Saudi Arabia saying, look, we don't need your oil. Stop sending us oil. Oh, I forgot to do the poll. Hang on. Let me check the poll, see what's on your mind. Sorry about that. Euro. You guys are interested in euro, huh? All right. Okay, so we drop into a 4-hour here, give you a little more price action. You see down, 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 up, up, sell, down, 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 up, up, sell, down, 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 just a tiny little up, and then down, 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 roll reversal, you see. We identified this over a week ago, actually, these prices here. Down, 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 up, up. Oh, where'd my drawing tool go? Hey, Epi, where's my Epi pen? Boom, 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 boom. Ba-dum, ba-da-da-ba, boo-doo-doo. Doo-doo-doo-doo. Beep, 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 boo. Okay, these prices that you see here actually go back to the day trading group last week. Okay, these were levels of support we figured that might be a buying opportunity. And you can see how well they held. Look how nice that one was, huh? So really, a technician here would take this down like that. That's what the chart says. You may also note that this is a key price from before. So somebody might actually try to do one of these things at some point. Okay. Okay. Pump up the jam. Pump it up. Well, your feet are stomping. Pump it up a little more. Get your booty on the dance floor. All right. So anywho, we'll just kind of back that out. And you can see we're getting closer and closer to something. But there's a lot of demand destruction going on with China not reopening. Okay. And then remember, I don't think we've even priced in a U.S. recession yet. Okay. Yeah, well, Kevin, yeah, we'll look at Kiwi. Kiwi's expected, based on their, what do they call it, a shadow board? Expecting 75 basis points, but also at the same time, probably announce a slowdown. So it'd be very interesting where you could get like Kiwi strength and all of a sudden a total collapse. HH, the Canadian recession will probably be determined by the US recession. Okay. So if I were me, I would say down, down, down during the first half of next year. Make you sweat until you bleed. Is that dope enough? Indeed. All right. Cool. So that's that on oil. I'm not sure why you want to trade euro, so we'll get there. We'll get there, don't you worry. Hope you had a nice weekend, though. Hope you had nice weather. It's sunny here in Georgia, but it's freaking cold, and it makes me very sad and mad and angry. I love when Mother Earth is warm and she hugs you and you feel safe. You spend the night outside now and you die. And I'm like, what kind of world is that? And I know that I know. Okay, so look. We still have this set. Now I've been watching this for about 5 days. So somebody obviously bought, which is a great opportunity. That drop here was a lovely opportunity. Simple little roll reversal. Okay. And now the upside risk is here and here. And what I'm, I wouldn't say expect. Expect is too big. Fundamentally, I believe we're going to get this. But it might not be till the middle of December or January. So fundamentally, it doesn't mean today is down. Although we have negative news. Asia was down. Europe was down. But nonetheless, I'm not expecting this necessarily now, but in some point in the fairly near future. Okay? You know what I mean? So it could happen now, but it may not. Okay? Are there any moves you are doing today? Not so far, no. Because, Jack, when I am in a situation like this, so for example, you can see what this chart says is that we have a positive slope. Okay? But I also have it set up this way. You see that, Jack? So I could argue the long-term trend is down, the short-term trend is up. And you're asking me, do I got any moves on today? Well, that, with this information that I'm sharing with you, that would be dumb. Okay, Jack, right? Like you can see that where if I break it down that way, you're like, oh, I see. You shouldn't short into support. That would be dumb, right? So it's more like, what if I get a break? Could I short later? Yeah. And where would my target be? Down here. So it's like, hurry up and wait, right, Jack? Hurry up and wait is kind of where I am. Now, if I had to trade, I would buy this, but I don't really have to. We're going into a holiday week. Why take the extra risk? Okay. I do know a professional trader that is by and large, their fund is done trading for the year. Okay. They're up more than 20%. So they've hit their goals. They're up more than 20% for the year. Now, if you benchmarked a macro, okay, if you benchmark a macro, you're not supposed to, but the return is over 20% for the year. And then you look at your benchmark, which would be S&P 500, and let's say it's negative 20%. So you outperform the market by 40%. Now what? You don't really need to trade anymore. Huh? You don't really, do you? You don't really need to. And especially if you're trading, think about it this way, Jack, right? If you've been trading this all year, you don't need the up. You got that positive CPI, and you're like, yep, done. And wait till the next move. So you could sit around here waiting to take this down, but seasonality says it's more likely to kind of do this for the next 6 weeks. So you're like, you know what? Just give me my money. You got your year-end bonus. Just give me my money. The last thing you need to do is screw it up in the second half of the last quarter. So big money coming into the market. Like if you take that psyche and think about across the board, is there lots of new money coming in or a lot of new money coming out? I would argue that the the only real money that has sort of rotated. I don't think there's new money per se, but I think a lot of money rotated out to treasuries right after the CPI a couple of weeks ago. And you can see treasury yields, let's say on the 10-year, drop significantly from 4.5 to 3.8, even 3.75, like huge drop. But what that means is money rotated. People actually bought the bonds, locked in the money, and went away. They're done for the year. Okay. Now, why would you do that? Just out of curiosity, why would an investor do that? Do you have an idea? Let me know why you think an investor bought a 10-year T-note versus a 2-year, for example. And why would they do it in a time of still uncertainty, at a time when the Fed is still going to raise interest rates? Why would they do that? And if you're not sure why a hedge fund would do that, or an institutional investor, if you're not sure, type in a question mark. Let me know what you think, or let me know you don't know. Because me knowing that you don't know allows me to fill the gaps over time. Look at this, by the way. Oil now down to 79 on WTI. Okay, so let's talk briefly. Let's say you're a fund and you're able to pick it up at 4.25. What if inflation fell over the next 10 years? And we were back at 2%, let's say 2.25. Okay, in 10 years from now. That means in year 4, year 5, year 6, year 7, inflation comes down, and down, back to more reasonable levels. Okay, 10 years for many people would make that assumption. So first of all, during a period of risk, so we had a bad year this year in the stock market. Most people, I believe, think like me. For next year, it's going to be down in the first half, up in the second half. Now, I actually mentioned this about 2 weeks ago. I said that I thought next year the stock market would close around 4,000. A flat year. We're at 4,000 now. The S&P 500 closed. Guess what? That's what Goldman Sachs has just announced. They just said the exact same thing. That the S&P 500 is going to close at 4,000 next year, not this December. 13 months from now, the S&P 500 will be at 4,000. But of course, along the way, there's probably going to be a big dip and a big resumption and get back to where we were. But if you think further out, that recession is what brings inflation down. Okay. Sounds like stagflation. Not necessarily. It's just and by the way, Kevin, if inflation's coming down, then it wouldn't be stagflation, right? So anyways, those assumptions are there. So let's say 2 or 3, 4 years from now, inflation is likely to be what? Below 4%? That's what people are thinking about. That's why money went into the 10-year, not the 2-year. In 2 years, we're not really going to have things fixed that much. We'll probably still have 5% inflation in 2 years. But in 4 years, in 5 years, 6 years from now, we'll probably be back to 2.25, 2.5. Still a little bit high, but good. Okay. Now, in a world like that, for the next few years, while the stock market's dropping another 20% and then rallying 20%, that's a lot of volatility. Well, if your portfolio has a lot of these 10-year T-notes, you have no volatility because you're just holding to maturity in the beginning and you're going to be guaranteed 4.25%. Well, everyone else is watching the stock market drop by another 15 or 20%. You're like, wow, that's scary. And you collect your 4%. Well, everyone else is losing 20. All of a sudden, you're pretty good, right? Plus you have low volatility while other funds have this drop by, imagine this. If next year the stock market falls by 20% and then comes back by 20%, and at the end of the year, nobody's made money, but nobody's lost money, you did get the volatility, and that makes your risk-adjusted performance look terrible. Your Sharpe goes to the, okay? Right? You have a terrible Sharpe ratio, and then your fund, for example, if you bought the 10-year T-note, well, look, if everyone else basically broke even and you made 4%, it doesn't make you look amazing, does it? But the difference is you didn't have any volatility. So everyone else made 0, you made 4. You're a little bit better in absolute return, but your risk-adjusted performance is way better because you never went down negative 20%. Now, what's the next step? 3, 4, 5 years from now, inflation is down to 2.25. You have a 10-year T-note with life still on it, paying what? 4.25. Guess what? You made 4% a year for 3 years, let's say. 4%, 4%, 4%. Not bad. Maybe it's 4 years, another 4%. So you get 16% over 4 years. But guess what? The value of your 10-year T-note is higher than what is printed on the 10-year T-note. Let's say it's a $10,000 10-year T-note. It says $10,000 on it, but the thing is it's paying 4.25, where a brand new 10-year T-note is only paying 2.25. You see? So now you could sell your 10-year T-note for probably 20% more than you paid for it, because it has a higher, I don't know, you don't call it a coupon rate, but you get the idea, because it says not only $10,000 on it, it says 4.25 annually, which is almost double what everything else is paying and almost double inflation. It's hugely profitable. It's a hugely profitable income stream. It's like an apartment building fully rented, but you don't have to worry about the economy or the rent or mowing the lawn, right? It's just an income stream. So you could probably sell it. Now you can do the math and find out exactly what, it might be 18.3572% higher than what you paid. I mean, you can just do the bond math. But for the simplicity here, you've already pulled out a 16% return on investment since you bought it. Everyone else was on a roller coaster of investments. Yours was steady, low volatility. You made your 16%, and then you sell it for 20% more than you bought it. So now you get another 20%. And now, not only do you look like a supermodel, but you sound like a genius. Huh? Like Einstein in a polka dot bikini. An itsy bitsy teeny weeny yellow polka dot bikini. So now, do you have a better idea of why suddenly money poured into bonds when for the longest time nobody was buying? It didn't happen until we hit peak inflation on CPI. And then it happened immediately. We saw it a little bit earlier in the year, and the same thing happened. Now, we have, I think, a 72 basis point differential inverted curve between the 2 and the 10. The 2 got to almost 5%, but money is not flowing into that as fast because the assumption is in 2 years we'll still have 5% inflation, or 4.5. It's really more like 4.5. So think about that. The market just told you. In 2 years, we'll probably still have about 4.5% inflation, But in 10 years, oy vey, it'll be much lower than that. What do you stink? Is that good? Does that make you happy? Was that good? Can you say good, coach? Thank you. All right, Terry's got a question. Hey, when you get a chance, can you go over technical entry and stop loss placement? Great. Easiest thing ever. Easiest. All right, Terry, give me an asset. What do you want me to look at? Aussie USD. All right, bull or a bear? No, I said 1, not 10. Okay, Aussie dollar, bull or a bear? Okay, is a sell. Great. What's your target? Target, Terry. Come on. What's the target? It wouldn't be S2. No, that's too far. 65, 42, 60. What? 65, 42. No. Close, I guess. All right, look. This is a simple swing trade. This is the sell zone, and this is the target. 67. So you're a little bit lower than that, 42. No, it's too far. Yeah. So if you had entered a swing trade, I don't know what your trade plan is, okay? Your stop goes above resistance. Your entry would have been around in here. Okay? Now we've made this low, so you've got your stop probably down here closer to break even, and you're done. Okay? And you're waiting for your target. Yep, simple swing. But it's not the lower one because I believe, again, you might say it's subjective, but I believe 67.33 is the top. If it was 67.00, then yes, 65.37, which is about what you have. So you might have just slightly different rollover. But yeah, the other thing that you have to start to worry about when you get down to the lower bound of that zone is that we get closer and closer to something that looks like that. Okay, you get the up, the down, the up, the down, and then, you get your December rally. So your target would be the averages. Yes and no. Remember, there are many different ways to skin the rabbit. So if I'm using moving average theory, yes. And I am. So the answer to that question is yes. But what I said has to do with a swing trade. So if you've taken the swing trading course, it's very, 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 very clear what to do when your top is this. This is your bottom. Okay? Have you taken the swing trading course, Terry? Yeah, well, you should. Okay, you should. I want to really bad. Uh-huh. Yeah, well, it's not that difficult. Like, what's stopping you? I want to really bad, but what? Anyways. And I know that I know. Okay, so anywho, well, if I were to guess, let me throw a guess here. Let's do something like this. That'd be a cool December. Crap it on a black. Yeah, you know, it's funny. Everybody in the world is sending me Black Friday stuff. Hey, give us money. We'll give you a sale. I'm not much of a salesman. I'm sorry. FX Bootcamp is so stupid cheap that there's no sale. Sorry. I dropped the price of FX Bootcamp by 90% when COVID hit, and I haven't raised it. So it's already 90% off. And you're like, well, Wayne, I won't buy it unless you make it 95% off. And I'm like, no, don't buy it. Right? Like, it's dumb. Lucas is like, it's a great deal. It's dumb. So buy it, love it or leave it. Buy it, don't buy it. Right? That's the Elon Musk way. You know, people are criticizing Elon a lot where he sent out an email to his employees and he's like, you get ready to work in a hardcore environment or disappear. And people are like, oh, he got reamed. Everyone's leaving. I'm like, dude, he wants them to leave. Good. You don't want to work here? You don't want to turn, Twitter around and radically change everything and do whatever it takes to make this company great? Then leave, right? That's what you would want. So everyone's like, oh my God, everybody's leaving Twitter. Good, he wants them to leave. I can't figure out why you need 30,000 people to run Twitter. And by the way, everybody in the Silicon Valley, by everybody, I mean on the venture side, knew it had way too many employees. Way too many employees. So if they were kind of leaning back and coasting, good, fire them all. Get rid of them. Start over again, rebuild. So I think that would be the right move. Well, I just imagine there's a lot of employees sitting around bitching and complaining. And one thing I learned running startups in the early days, being a nice guy has nothing to do with running a good company. And there was one situation where there was a female employee who had a negative. She rubbed me the wrong way and I didn't like her, but that doesn't have anything to do with anything, right? I'm like, oh, she just doesn't. And it's personality, right? I thought just personality didn't gel well with my kind of personality or whatever, right? So I let it slide. Turns out she was talking negative about everybody and everything behind the scenes and got some other employees kind of doing bad things and definitely not following the mission of the organization. And I learned right then and there, I should have fired her immediately. My instinct was right. So instead of me losing one bad employee, she turned 3 or 4 other good employees into bad employees, and I had to, it cost more. You know what I mean? So anywho. So in future businesses, if I felt like there was, especially in a tiny startup, guys, where you only have like 100 employees or 150 employees, you don't need one bad apple could take out 3 or 4% of your entire company. So, yeah, so I consider those types of employees, well, let's just say you got to deal with it quickly before it spreads. So anyways, besides that, I don't know anything about Twitter and Twitter employees. But I imagine, though, if he said, we're radically changing this company and I'm looking for people that believe in what we're about to do, and you give people a choice and they're like, no, I don't want to work for you. I don't like the new vision. I'd rather have a 3-month payday. You're like, good, you want those guys out. You really do, honestly. And then you find new ones that do buy into the new vision. Otherwise, you'll never get the new vision. So again, I don't know anything about Twitter employees. I don't know good, bad, or the other. I've never worked for Elon Musk, all that kind of stuff. So I don't know the inside stuff. But if I was building a vision, the first thing you need to do is make sure everyone else buys into the vision, or help them go find a better vision. But if you're not going to help me, you got to leave. Yeah, that's it, right, Jim? But imagine you found that 30% of the company didn't leave when you took it over. The tough ones, the good employees left. They're like, screw this, I ain't working for Elon, and then they move, right? Well, what about the ones that didn't have the guts to quit? They want to sit there and just take the salary, and then you're like, dude, buy into the vision. Oh, I don't buy into the vision. I'm not gonna work hard on the vision. I don't think it's even gonna work, but I'm here to collect my paycheck. Well, then you gotta help the birds out of the nest. You know what I mean? Yeah, it's funny though. He has a bad rep for being a hardliner on productivity. Well, what kind of company is soft on productivity and is okay with mediocrity? You know what I mean? Like, I can't imagine. But there are companies. I do know a friend of mine worked for a company many years ago, and he walked in and everyone in the building had set up a system of looking busy. Nobody actually did work. Nobody. So he got bored because he was just sitting around all day and he wasn't used to it. And he was a young leader at the time. So he walked around looking for things to do, and they ended up firing him because he was going to ruin their good thing. So anyways, he got fired because he wanted to work. And they're like, you're going to screw it up. So anyways. You'd be amazed what a few thousand workers with a charismatic leader, if they were all hardcore following the leader, you'd be amazed what they could do. Global Investor says they all should have quit at once. Yeah, but great. It would have saved everybody the trouble. Hope says, but he's a horrible communicator. Yeah, that's not surprising either, right? But whatever. I don't, right? Anyways. I'm still mad at him for all the crap he did with crypto. I'm surprised he didn't go to jail for that. I'm surprised he didn't get into trouble with Tesla when he made $500 million trading crypto with Tesla money. If I was one of the venture capitalists or board members, I would have went ape crazy on that. Right? I would have went nuts on that. But anyways, Let's not do. Let's move on. You guys wanted to do euro. Let me take a look at euro. Okay. Okay, and there we go. One of the things I did last night in the day trading group is, oops, let's do this in yellow. I marked it up like this. I connected the bottoms and I said, yeah, you know, let me do this in a different color. I said, yeah, if you look at this as a flag pattern, then the pattern's going to look like this. But I said, look, I don't know. I'm not really that sure. That's usually what happens in seasonality. But, you know, I said, look, I just kind of want to wait. And now I think that was the right play. I think we have this in the future. Something to that effect. Oh, the FTX guy made it? Yeah, he should go to jail. Yeah, he should go to jail for a lot of different things. Fraud. I'm sure, you know, moving money around, there's wire fraud in there somewhere, as well as criminal fraud and financial negligence, misreporting to public markets. I mean, you know, yeah, he should go away for 100 years. Okay. Richard says, with all the Fed speaks, brings back dollar strength. No, I mean, yes, but no. Okay. Sorry, I gotta go soon. I haven't, but so anyway, so that's what I see here. Notably, that we're no longer sitting on the moving average. We have made a lower low. You'd set up a lower high. So I would play this if I were me, because I'm fundamentally bearish on this pair, but I'm not ready to go full fundamental here. Okay, full frontal nudity. I'm not ready to go full fundy here. I'm just thinking down to that, and then probably another, you know, Santa Claus rally, maybe after the holidays, and moving towards, remember, non-farm payrolls is on the 2nd. We got the ECB ban on Russian oil. That's on the 5th. We have some inflation data, all that kind of stuff. Interesting. So, you know, with the thin market, why not kind of fart around here and then do one of these things, okay? And then head back up. And I don't know when, but it'd be very interesting if we went back to a price about here, 105, and then it created a double top, let's say 2nd or 3rd week of December. If it did this, so now I'm thinking, you know, 3 weeks from now, if we ended up doing a top like this on euro dollar, I would sell until April. I would sell and hold until April. Okay? Now, that's the difference between me and probably the average YouTube live streamer. I'm already planned out January, February, and March. And so the reason I'm so conservative and neutral right now, even though price has been going up for a while, is I believe there's a prevailing trend. Okay? I want you to think about being at sea on a sailboat. You have the currents and you have the winds. Okay? Now, they can change. They can change. They do change. There's lots of variables, but there's also consistency. So if you look at seasonality, for example, there are times of the year where the currents will take you from, let's say, northern Chile or Ecuador, and they'll take you west. And the winds will go west and the currents will go west. But there are other times of the year where there's no wind at all. There might be some current, but the current moves. The winds die, they're strong. And on any given day, the wind could be left, right, north, south, east, west, or combinations of those. But what's the prevailing trade winds? What usually happens in January? What usually happens in July? Okay? And you got to know all these things if you're just going to be out on a sailboat. And then there's cycles inside those cycles. So years ago, I read a story about someone who decided he wanted to get in a kayak and go from San Francisco to Hawaii. Now, if you don't know what that is, how far that is, it's farther than New York City to San Francisco. New York City would have been closer than Honolulu. And he took a kayak and he said, oh, yeah, well, I got this little sail. And he's like, the trade winds will take you from San Francisco to Hawaii. So I'll paddle, but I'll also use the wind. Well, you got about, 2,000 miles out to sea. Guess what? The wind stopped and never came back. He didn't know about La Nina and El Nino. So there are cycles, and there are bigger cycles and there's smaller cycles. And he got caught between cycles. Uh-oh. How would you like to paddle 4,000 miles to Hawaii? Or what do? Turn around and paddle 2,000 miles to San Francisco? Yeah, but the current now is going the wrong way. So anyways, what am I trying to say? I see what's happening technically. See it. I also see what's happening fundamentally. And one of the biggest, responsibilities of my job is to line them up. Okay? Be aggressive when they're lined up. Be conservative when they're not. And so I'm in a conservative mode, but I am sort of ready, willing, and able. But I don't even have the conviction yet, even though euro dollar's coming down, and that's what I would expect. There's still no lower low on this time frame. So how could I be hardcore aggressive bearish? I'm not, but I can be conservative, modestly bearish. And so before I can become hardcore aggressively bearish, how about a double top, then a lower low? Now! Okay? Now, game on. But we're a long ways from that. So I have to think about why would that occur? What would set that up so that everybody would concur? Remember, I'm not trying to outsmart the market. I actually have to wait for the rest of the market participants to figure it out and agree with me. And very often, a double top is where people get in if they're bearish, or a higher low. A lower high. So for some, they sell here. For others, they sell here. And am I there yet? No. So I could take a little short, but I can't be aggressive. This I could be aggressive. This I could be very aggressive. And that's not today. That's not next week. That's probably second, right? What is this? The first or second week of December. This is probably second or third week of December. And that's when I'm due. So make sure you click the thumbs up on the way out. Please tell YouTube this is quality content. Okay? Links to additional resources are in the description below. And the reason I'm here is I want to help, so let me know how I can help. be a subscriber of the channel. If you're in my day trading group, I will see you at 4 p.m. for Ripper Awesome Trading Day. Peace on earth. May the pips be with you. May your profits be above average. Monday says, how do you avoid correlations when swing trading multiple markets? You wouldn't want to avoid correlations, but you do have to understand them. Remember, the correlations come from macroeconomics, and that's what we do. So anyways, peace on earth. May the pips be with you. May your profits be above average. Have a wonderful day. See you later. Hey, that just happened.